Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, the founder of the Smart Investor in Singapore. David, as always, thank you for coming on the show.
You're welcome. Yes, I look forward to this banter every week, Brian.
Now, before we get your insights, let's take a look at how markets in the region are performing. The SGX Straits Times Index is at 3,178.09. It's up 1.18%. Bursa Malaysia FBM KLCI is at 1,533.63. It's up 0.08%. Looking across the region, we've got the Nikkei, which is at 28,692.67. It's up 0.33%. But the Shanghai Composite is down 0.53% at 3,515.64. The Hang Seng is at 27,980.23, down 0.58%. And the ASX 200 rounds up the numbers at 7,311. It's down 0.04%. So David, mixed markets across the region. Tell us why.
Well, I think it's partly because we've had to fly solo without the help of the US markets giving us any kind of guidance. America has been closed since the close of business on Friday. So it wasn't open yesterday for July the 4th, which was on Sunday. So they took yesterday as a day off. So we'll probably get some clearer direction for the market after the market opens later on today. But for me, Brian, you know, I'm a long-term investor. We're going to have lots of July the 4th and lots of public holidays between now and the time that I no longer want to invest anymore. And so I think we're fine. I think we're okay. Markets at the moment are moving in the right kind of direction. And look at Malaysia, and I just think, hey, Malaysia looks relatively cheap at the moment. I mean, I was talking to somebody earlier this morning about the markets that I like best. And I said, I like the markets where the vaccination rates are relatively low, because people get scared about markets where the vaccination rates are relatively low because they think, oh, what's going to happen to the economy there? But we know how the playbook works out, Brian.
Yes.
As soon as you get people vaccinated, the economy opens up again, industry start to go back to work, people start to go back to work, money goes into the pockets of consumers, and they go out and start spending. So we know what is the end result. We know what we need to do, which is lockdown at the moment, try and sort of contain the virus. And then the next stage is to try and get as many people vaccinated as possible. And then the economy starts moving again. So when I see markets like that, Malaysia is one, Indonesia is another, Philippines is another, Thailand is another. And I just think, well, you know, why are people pulling money out of the market? Because we know how the playbook works out in the long term.
And so if you're a value investor, this is a good time to go in.
Well, absolutely, yeah. And when you have a look at many of these companies, they're going to be fine. Sure, you know, they've had to close down for 3 weeks, maybe 4 weeks, but then they'll go back into production again. And all that pent-up demand will ensure that whatever products and services they were not allowed to provide will be available. And then people will go out and start buying again. So I'm not too concerned about things, Brian.
David, one area that investors are concerned about now is really, besides the pandemic, is some of the new regulations that are actually coming up in China. So in China, we've got some new cybersecurity regulations. In Hong Kong, we have these Doxxing regulations where, in fact, Facebook, Google, and other tech giants may stop offering services because of this. Could you kind of enlighten us on what these laws are all about and where you see the impact on markets?
Okay, well, I mean, the laws came about last year, around June last year, and it said that the regulator could investigate any company where the operation was going to affect national security. Now, I have to say that anything that affects national security should be investigated, because ultimately that is the responsibility of any government, to ensure that its citizens are safe. And you don't really want the security of every citizen in the country to be compromised in any way. So that part I'm okay with. But I think the problem with this one is that it is so vague. I mean, the law is so vague. So the regulator can investigate anybody it wants to. And just look at recently, Didi. over in America. It listed in the American stock market. And then 2 days after the listing, the Chinese regulator said, we're going to be investigating you. And they they made the company pull its app from some of the popular app stores in China and said, you can no longer go out and look for new customers. Now, that is quite worrying. And we don't even know what it is that Didi has done wrong. And so, as far as investors are concerned, what you now have is a law. It's almost as though the law is a catch-all for anything. So any company that collects data on people could be investigated by the regulator at will. And this is really what companies like Facebook and Google, maybe even Yahoo, are very worried about. And they're saying that if we get investigated, what does it actually mean? What does it mean to us as a company? If we haven't done anything wrong, if we ensure that the data that we collect is secure and we're not giving it out to anyone else, why should we be investigated? And I think in the case of Google and Facebook, they're saying if these laws are too draconian, they would consider pulling out of Hong Kong even.
And so that's going to have a significant impact, a couple of things, because essentially the Didi situation is a red flag literally for any Chinese companies, therefore, that want to list in the US, because US investors are going to take a second, third, fourth, and fifth look at it and think about the risk associated with that. So that's really hampered. I think one of the impacts of this is also it's hampered the perhaps appetite for US investors for Chinese stocks.
Well, I think America has already warned the investors that any company in China that lists on the New York Stock Exchange or NASDAQ, these companies could be delisted at some point in time at the request of the regulator in the US. And so these companies will have to move back to either Shanghai or Hong Kong. So we know that there is a risk there. But then when you have a look at a company like Didi, which is a ride-hailing app, and all it operates is a taxi service, a glorified taxi service within China.
Yes.
So why would they be under the scrutiny of the regulator? What data are they collecting that the regulator considers to be a risk to national security? Or is it because, Brian, that this company dared to list on the New York Stock Exchange, and as a result of that,
the words right out of my mouth.
Well, exactly. I mean, that must be going through the minds of many investors. Are they investigating this company because they dared to list on New York rather than to actually have the listing in either Shanghai, Shenzhen, or even Hong Kong? And are they punishing this company because of that? Now, what they're saying is this company has to stop having its app available on the App Store. But I look upon that as being a bit like if you're in a school and you have a tuck shop and they say that, oh, you know, the school kids aren't allowed to go to the tuck shop anymore to go and buy food. But what they don't realize is that all the kids already have plenty of tuck in their school bags and their tuck boxes anyway. So as far as Didi is concerned, the app is already available. All it is that they can't go and get new customers, so they can't grow. But because the app is so proliferate already in China, people are using the app, so it isn't going to affect them that badly. But what I think might happen is that the regulator may say, we find fault in you. And let's not forget that generally, whenever the law is applied in China, they, in 99.9% of the cases, they find something that is wrong with the company or the person. And so their win ratio is very high. So they'll probably just find Didi and they'll just say, hey, you raised about sort of $2 billion on the New York Stock Exchange. We'll have some of that. Thanks very much.
Yeah, absolutely. Well, thank you very much for your fascinating insights today, David.
You're welcome.
Now, we've been speaking to David Koh, the founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check our LinkedIn and Facebook sites as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks for tuning in.